Hello, and welcome to another update video about XRP and Polkadot. First of all, we talk about XRP. Continues to grind lower and hasn't made a new low since yesterday, however. It hasn't done anything to confirm a different wave count, so it's cooperating at the moment quite well with the primary scenario. I'm already on the 4H-hour chart, so just shifting it into place. So you can see here from this wave W top that formed in July, we have an AB and a possibly still unfolding C wave to the downside. That C wave is really unfolding in slow motion. This is forming then an X wave, that's the idea, a complex XY structure and the Y wave to the upside, which should start to unfold as soon as the X wave is complete. This should also be an ABC structure. And then the A wave could be a 5-wave move or a 3-wave move. Then we should see a B wave pullback and a C wave higher. This is sort of what I'm watching as a potential. So, the best I can do at the moment is to show this wave count is especially valid as long as the downtrend at the moment is intact. I'm talking about this move down. This is basically supporting the current idea of this larger corrective pattern. Now, what happens if we suddenly break higher? First of all, as long as this resistance level isn't even broken, there's absolutely no need to consider something different. And the resistance area is between 56.5 cents and 61.3 cents. So it's between the 38.2 cents retracement of the third wave down and the 61.8 cents retracement. Because it's a go, it's because it's a diagonal to the downside. We have to consider the golden ratio as resistance. But be aware that by the time we get into, let's say, or towards the 50% FIP level, or the 61.8 cent, the price would have broken to the upside of that descending trend line. This obviously would already indicate the immediate downside momentum might reduce and maybe something more bullish is going on, but, we all know that XRP likes to move in a corrective pattern. I shouldn't say I'm sure, but I think at some point it will really surprise. The problem is, we have at this stage no clear setup for it. It's now in a support port area. I haven't got a 5-wave move up. This is simply a pullback zone after a 3-wave. So it's a 3-wave move down after a 3-wave rally could literally end here and could go a little lower. Very difficult in these corrective structures. But what I want to emphasize is that if it breaks higher, and we even breaks above the trend line and resistance, it's likely the yellow count. You will know the yellow count. It's basically the same count. It just means the delay of the sell-off because the B wave, which presumably ended in November, it's basically still unfolding as a larger ABC structure. If that's unfolding, then it should turn around very soon, and it should turn around before really breaking below 45.5 cents. So this is a very small window where the market could turn around and basically activate that yellow wave count. But until it really gives us more evidence that this is unfolding, I'm watching the move down here as an unfolding third wave. Where are we here? Third wave. And I'm not suggesting that wave C is yet finished of wave 3. In fact, if we take a look at extensions and say, okay, wave 2 topped here on the 9th of December, it doesn't look right. If this is an A wave, this might have been the B wave, and maybe we are in wave C down. But also here, looking at really the smaller time frame, maybe this wave B is still unfolding. We have to be a bit flexible with these corrective patterns at the moment. There is a downward trend, we're looking for lower prices. If there is a change in trend, it would need to be indicated by the break above the trend line, and then also, in addition, by a break above the resistance levels. Until then, I would focus on lower. No, it's not very clear trend, because there's no clear 5-wave. Move up on the larger time frame, so any movement is not really supported by a higher level trend, which makes this entire chart so challenging, which is also why I know a lot of Elliott wave analyses aren't covering XRP anymore. Because it is a mess. It doesn't mean Elliott wave doesn't work. It just means that, Elliott wave is a trend trading tool, and it's best for trend trading. The problem is, obviously, here it's a mess. You can trade that as a range trader. We are looking at the long-term chart. We're just moving sideways and it's getting worse because the volatility is even reducing as we're heading into the apex of a huge triangle. Now, we will talk about Polkadot coin. As you know, the yellow count, which indicates a leading diagonal from the October lows, formed like this wave, 1 wave, 2 wave, 3 wave, 4 wave, 5. It's a bit ridiculous, this wave 4, so it's actually way too deep to be reliable. So I do not trust this scenario at all. I like to see normally, no way for that to go beyond or below the 61.8 retracement level, and it did that. I have taken that level of the chart now because it was broken. We have recovered above it. I think it was around $620. The market has recovered above it. However, it still doesn't really have the right look unless we're dealing here with an expanding diagonal. That's of course valid as I say it. It's not an invalid way count. But these are rare. Come on, these expanding diagonals, not saying it couldn't be one. It's not necessarily the highest probability count, so we certainly do not have impulsive price action from the October lows. It could have become an impulse. So I gave it the benefit of the D shallow wave to bit suspicious, but it reached the target of the third wave. But in the fourth, it lost its impulsive potential. Can't remember what exactly the level was. That it broke basically indicated something different is going on, but it was too deep to be reliable for an impulse, and certainly not impulsive. So we're dealing at best with a diagonal which could form one more high in wave 5. If we see wave 5, where should we expect the target, the way to measure? That is to take the length of wave 3, go to the low of the wave, the length of wave 1, go to the low of wave 2, and then $10. $90 is sort of the first main level to watch, possibly up to $13.24. In that range, there is another way of measuring it because we can take the length of waves 1 and 3 and go to the low of wave 4, but then again, if it goes a little lower, the fourth, then we have to say that. But at the moment, if I measure against the last low, there's really good overlap between the 61.8 extension level and 1.618 extension, around $1. So there's really good overconfluence overlap, basically, between different Fibonacci levels, so that points towards some potentially strong resistance there or a little bit of a magnet. That the price could act as a magnet, and the level basically acts as a magnet and draws. The price to it, we'll see, but that's just one scenario. This diagonal pattern, you now have all the targets for, to be honest, to keep this scenario alive. I would really not want to see a break below the last swing low, which formed here on Tuesday at 599. It would just make it even less likely. Probabilities have already shifted towards the white count anyway. In the white count, the pattern is a little bit different, and we have 3 waves up in wave. We have a 3-wave pullback, which I consider a B wave. It could still get another low, which would be ideal, to be honest. So if we get one more low, it would even further shift probabilities towards the white count. It would basically be ABC in a wave, ABC in a B wave, and then we get a C wave up that rather should go a little higher than a wave 5 in yellow here. We would rather look at pause. Well, it's a C wave because this is a B wave pullback. We calculate the target by taking the length of the wave A, and we go to the low of the B wave. Again, if that goes a little lower, we have to adjust that. It's a bit of a moving target, but here the 100% extension level, which will be key, and which is one of the levels to watch for a C wave, takes us to $16. So let's say shorter and potentially more bullish than the yellow count, but it's also a count that is less certain, because it means that there will be a 3-wave top, and we cannot really trust a 3-wave top, so whatever happens then after that C wave, we will have to drive on the S side. So it's not that we can say now this or that should happen. After an ABC top new bear market lows could happen, it could turn into a triangle. Very difficult, but that's at the moment. We can deal with these support levels. Should we form a low below Tuesday's low, then we've got support at $580. It's a very important level. There's also good confluence there at 530, 520, 540, 458. And below 439s, I haven't got any reliable bullish support level left, not in the yellow count and not in the white count. Official invalidation for the yellow count is down here at $485 pretty much. That's the official invalidation, but I that already a break below the last low will make that yellow count very unlikely. It's already less likely now because the price broke this week briefly, even though it was only brief, but below the 61.8 FIP level. That's my update about DOTs. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. Thanks a lot for watching. Bye.